Hello everyone, welcome back to Wealth Growth Club. Today, let's break down the journey of JSW Steel, a leader in India's steel sector and a key name for anyone interested in metals and manufacturing stocks. Let's start with sales. If you look 10 years back, JSW had sales around 51,220 crores. Today, that number is 1,69,028 crores. So, in a decade, the company's sales have grown by over 3 times, which works out to about 12% growth each year on average. Recently, years were particularly exciting. Sales shot up 83% in 2022, but the trend cooled, and the latest year actually saw a 4% decline. So, if you are wondering whether growth is smooth, the answer is it's quite cyclical, which is common for metal and commodity business. Now, let's talk about expenses. 10 years ago, expenses sat at 42,051 crores. Now they are at 1,44,463 crores. Nearly 40 to 15% of that is raw material cost. Steel making needs a lot of iron ore, coal, and energy, and those prices swing a lot. Manufacturing cost, usually 19 to 28% of expenses, represent the huge investment in plants and machinery. Employee costs are relatively small, around 2 to 4%. Other costs stay steady at 2 to 4%. With rising input prices, expenses can spike, squeezing profits. So JSW really feels the ups and downs of global supply and demand. Let's move to operating profit. JSW's operating profit went from 9,169 crores 10 years ago to 24,565 crores today, almost tripled. The company's operating profit margin has ranged from 15% to as high as 27% in peak years, currently sitting at 15%. So for every 100 rupees JSW Steel brings in, it keeps about 15 rupees as operating profit. Good. But those margins move a lot, with big years when steel prices are high and lean years when demand drops. Now, what about the other parts? Other income, interest, and depreciation. Interest costs are significant, 8,556 crores this year, showing JSW carries a fair bit of debt. Debt to equity sits at 1.24. Depreciation is also high, 9,637 crores this year, because running massive steel plants wears out a lot of equipment over time. Other income is small, not a major factor in profits. If you see the net profit, 10 years ago, net profit was just 402 crores. This year, it's 4,833 crores. That's more than 10 times growth, or about 24% annualized. But here is the thing, it's not steady. Net profit can swing dramatically with steel prices and global cycles. In peak years, profit is huge, 20,938 crores in 2022. But in weak years, it shrinks a lot. Earnings per share was 1.87 rupees 10 years back and now stands at 19.81 rupees. Dividend payout is modest, around 24 to 25% of profits most years. The dividend yield is only 0.27%. So JSW is not really an income play. Return on equity is low this year at 5% and has averaged between 5 to 15% over the last decade. Iron and steel is a tough business. Returns are rarely steady. If you compare JSW Steel with its peers, JSW's quarterly profit for the most recent period is 2,209 crores, just above Tata Steel, 2,007 crores. While its sales this quarter, 43,147 crores, are behind Tata Steel, 53,178 crores. JSW's PE ratio is high, 50.2, much more expensive than most peers, which generally range from 16 to 40. Tata Steel and Jindal all show similar cycles, with profits and margins swinging when commodity prices move. So, overall, JSW Steel is a classic example of a cyclical business. Growth comes in waves, profits swing big, and margins depend on what's happening in world steel markets. When times are good, profits and share price soar, but in weak years, things slow down a lot. Heavy debt and large plants mean returns for investors are lumpy. If you invest in JSW Steel, you are signing up for the full cycle. Be ready for ups and downs. But if you catch the cycle right, the rewards can be huge. If this deep dive was useful, subscribe for more candid, easy to follow breakdowns. And let me know the next stock you wanted to understand right here at Wealth Growth Club.